Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Wednesday, September 14th, and we are looking at the Dow Jones Industrial Average continuing a slide, which really began on Friday. We had a solid up day, of course, on Monday, and then we have been giving all of that back ever since that for the last days, Tuesdays and Wednesdays. However, at the same time, the Dow is tracking above 18,000 at 18,034. Net change in terms of what we're looking at is about 0.2%. When we look at the Standard & Poor's, that's off about 0.4% at 2113. But we do have the NASDAQ, and the NASDAQ is trading higher on the day, up about 0.1% at 4728. So traders, in terms of the U.S. equities markets, the best sector performance, or I should say index performance, has been the NASDAQ, without a question of a doubt. Today, when the Dow is down fractionally and the Standard & Poor's is down fractionally, we've got the NASDAQ actually up fractionally. As I said, up about 0.1%. 4.5 point gain, 47.28. This, of course, is the NASDAQ 100 E-mini. Now, we are looking at a weekly chart of the NASDAQ E-mini. And in that chart, I've basically added one fib retracement, which really begins from this low right here at around 3,900 and takes us up to this record top, which is just, 4,850, roughly in that area. There we go. I had to remove my 0 and 100 lines so you could actually read the numbers in there. Now, when we look at this chart on a weekly basis, the fact of the matter is, yes, we have had a solid move up. And yes, just as the S&P and the Dow Jones Industrial, when they had difficulties, we had the NASDAQ having these mini crashes pretty much at the same time. This, of course, is what I called our Christmas correction here. And this occurrence here was due to concern over the Chinese economy. All markets reacted and reacted heavily. Now, since then, the market began to move up. It didn't hit a record top here, but it did hit a double top here before making one more low at around 4,200 before moving up. Now, here's what I find most impressive. 1, 2, 3, 4, 5, 6, 7, 8. So for 2 consistent months, we had week in, week out, higher pricing until it reached these record tops. Once it reached the record tops, we had a solid 1 month of trading activity. Here's 4 weeks sitting at the top in which the market really could not break the ceiling of approximately 48.45. We had a retracement, of course, last week in which the market came down. And then this, again, is a weekly chart. So at the beginning of the week, we certainly saw this market move up a little bit. Then we had that correction. But take a look at this. We are forming a piercing line, and we're forming that piercing line at a 23% retracement. Again, it's a small retracement cycle. We're not looking at a ton of historical data. As I said, this is the area that we are accounting for with this fib retracement, but nonetheless, this has been an impressive recovery that we are seeing in the NASDAQ. So traders, I want you to contrast the chart that we just looked at, which was the weekly NASDAQ, with this chart that I have just pulled up, which is our weekly S&P. I'm actually using the SPX, which is the S&P 500 index rather than the E-mini. Now, when we do that, we do get an interesting candlestick. Now realize we're only at Wednesday, so this candle can form anything, but compare this candle to the candle we saw in the E-mini NASDAQ, which really formed a piercing line because it went into really the body of the prior week's trading activity. So it looks something more like this. And of course, that would be colored in green. We'll go ahead and color that in. But what's really interesting is that not only are we having a much smaller net gain on the week. There is still a slight gain on the week, but it's almost given back all of it. But when you look at the sell side or last week's trading activity, it was much more severe than what we saw, of course, in the NASDAQ E-mini. So traders, I've just pulled up a daily chart. Crude oil today closing off over 2.5%, 2.69%, a $1.21 decline per barrel, 43.69. That is our current print. Now, what I find interesting in this market, of course, is over this last week, we had Monday trading higher, but the last couple of days we have traded lower. I've got a very, very short-term bullish channel that we have added into this particular chart. When we do that, we can see that we had a clear break. That break to me is significant because it signals a further decline in terms of where it could go. First, we want to see if it can take out this particular low, which sits right around $43 per barrel. And if not, my sense is it's going to head back to 42. But most interesting, if you recall back from months ago, as this market was tracking lower, we really looked at the price between 42 and 44 as a critical area that we felt oil would inevitably find a price point at. We're seeing just that. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow on Thursday for another Trending Markets. Bye-bye.